Hello everyone, welcome to the Wednesday trade recap and forecast. So we're going to break down our 6 currency pairs. I have to say markets have been a bit more corrective, a bit more range bound, but nevertheless, let's get into the market analysis. So we're starting with the euro and US dollar. As always, from last Wednesday it was around here. Nothing much happened on the euro US dollar. I was looking at this V reversal to play out. As you know, when I see a V, I want to see a range and I want to see a downtrend, which didn't happen, so nothing there. Then we had a potential liquidity sweep right here, a sweep of this area. I didn't like it. I wanted to see a better defined, wider range, personally. So I did not take the liquidity sweep. Also, we have released all of our entries that we took in our backtesting, or all of the trades that we took in our backtesting of the liquidity sweep on the Aussie and US dollar. So you can find those at Zentum Trading in the trade gallery resource. You have all of the trades we have taken in our backtesting from the last 3 years. So just wanted to mention that because the data is really interesting and I think it's really good, especially for people that want to backtest the liquidity sweep so that they know exactly what the mentors are looking at. So let's get back to the price action. Ranged a bit here and then went down, kind of descended, but very correctively. So the price action is corrective. It's not showing me much. The descending is not clean. Why? Because we're breaking the high right here. The data seems a bit weird as well. We have some gaps. I'm not sure if that is the case with FXCM. Let's check out OANDA. Yeah, so that just may be FXCM data. That's okay. So currently I want to see potentially this impulse to go down. I'm not going to put this pair on the watch list. It's just corrective. So being more patient with the euro and US dollar, seeing if this momentum can melt down, then I will look for sell setups. Next on the list, we have the euro and the Japanese yen. So from last Wednesday was around here. We had a really clean ascending structure. So I was very interested to look for some reversal setups right here. Let me see if this one was counter the trend. No, it was not. Okay, but nevertheless, this was starting to clean up. The ascending was definitely starting to clean up. Again, here we had a break of the low, so a bit of a break of structure. Here, break of structure as well. But then right here on the top, we started to break the highs and retrace 1, 2, 3, 4 times. So I was very interested to look for a reversal setup, potentially a downtrend, and then look for sells. That didn't happen. Okay, that never happened. So we broke the low, retraced, broke the high, retraced, broke the low, retraced, and we just kind of started to range around. Although I did have my order on, I have to mention that I did have my order on right here. This is not a break of the high. This was the entry level. I had my sell limit for a reversal setup, okay? Because I really liked this ascending price action. One thing I know about the euro and the Japanese yen, this currency pair loves clean ascending or descending channels. So that was very interesting. But then this candle printed, it did not tag me in, printed a wick, so I did remove my pending order, okay? Then we were flat, and now I'm mostly expecting a range-bound market like this, okay? So I'm expecting a larger and a wider range. What am I looking for? Well, I am looking for a large impulse down or a large impulse up, okay? So just looking for the price to clean up, show me some cleaner price action. I'm not going to put the euro Japanese yen on the watch list because I'm just not seeing conducive price action to be taking trending entries. So let's get into our next pair, which is the Aussie and US dollar. Took 2 trades on this one. So let's cover those. Last Wednesday was around here. We had a drop, had a flag form right here. For me, price action was not the best. And then the flag was big. It had some major bullish pressure, some major buying pressure, had double wicks on the bottom, too many warning signs, okay? So price action not the best, double wicks on the bottom, the flag is big. I like to take small and tight flags on the Aussie US dollar. And there was some bullish pressure, especially in this candle. So this one did not fit the plan. Then you have this one right here. this one for me was nice and it did fit the plan. I did take it. Now, per price action was not the best, I have to say. It was not really the best price action. What I did like is that the overall trend is down, right? Definitely not the cleanest downtrend, but it is going down. We kind of grabbed the liquidity here, went down, and also this was a news candle. How do I know it was a news candle? Huge wick on the top, huge wick on the bottom, large body as well. Telltale sign of a news candle. One thing I know and that I have personally tested is when you get a news candle and the price action continues in the next couple of hours, so it creates a trend in the next couple of hours, usually you get a nice trade. So news candle, price continues in the next few hours, we get some momentum, then we get a nice flag. What I liked about it, again, overall downtrend, news candle, price continues, nice tight flag. Warning signs, well, the warning signs were price action is pretty corrective. There's really not a strong downtrend such as this one. So it's not really that strong or that high probability. The impulse is not that big either, okay? The impulse is kind of on the smaller side. So those were the warning signs. Again, weighing up all of the pros, weighing up all of the cons, I decided to take this sell setup. Took it, went into some profit, and then unfortunately took me out for a reduced risk loss. Okay, so this was like minus 0.6% loss in the end, because according to our trade management rule, I moved my stop loss 2 pips above this high right here and then got taken out right here. So for me, this was worth the risk, especially later in the week. Okay, this was on a Friday. I know later in the week, Wednesday, Thursday, Friday, usually my trending entries get some really, really nice results. So we can move on. Took another flag setup right here. What did I like about this trade? Well, I liked that the trend was up. Okay. For me, this was in an uptrend. So that there was some movement going up. Impulse was okay, and the flag was, it was not big. It was not really big, but it wasn't really small. I liked that it was kind of like a wide, flat range. You know, it was pretty flat for me personally. So because of the uptrend, because of the formation of the flag where it wicked down here, wicked again here, closed with a nice candle, I was willing to risk the 1% on this trade. Warning signs, there were a couple of warning signs, I'm not gonna lie. First warning sign, a bit of a slowdown in the uptrend. A bit of an ascending structure, which you could say. That wasn't great. This red candle in the impulse, that wasn't great either. Big red candle in the flag. I know a lot of people stayed out exactly for this reason. That red candle, that was too much selling pressure, and it was Monday. So yeah, there were a couple of warning signs, I'm not gonna lie, but for me on the Aussie US dollar, I have missed out on a lot of percentage because I was really careful with the flags. So what I decided to do, if I see a nice uptrend or a nice impulse and I see a flag, I am more willing to take it than to stay out. I have found it is more worth it for me to take these trades than to actually stay out of these trades, because I have missed out on some nice Aussie US dollar flags because I just saw too many warning signs. So I missed out on a lot of percentage. Going further, going into the future, my plan is going to be, and is already, that's why I took this trade, to be a bit more aggressive on the Aussie US dollar flags. So because of the uptrend, I was willing to ignore some of the warning signs. Again, took it. Price went up. It was looking really, really nice. I was running some nice profit, I'm not gonna lie. Okay, then it went back down, but then it continued back up, okay? And it was running like 2.3% at one point. But then, unfortunately, as it happens, the price completely reversed. I did manage to move my stop loss 2 pips underneath this low, so took a really small loss on this one, okay? So this was like a minus 0.1% loss for me personally. But yeah, I think it was worth the risk. Just going back on the trade, analyzing it, yes, for me it was worth the risk. It was a small loss in the end. I didn't take the full 1% loss. It was minus 0.1, but it was running some really nice profit. Unfortunately, it did not pass me any profit from challenges, but maybe next time. Okay, it's just part of the game, part of the probabilities. And yeah, it happens. It is what it is. Then we started descending, broke the structure, and now we are starting to potentially drop just by looking at this price action right here. Okay. Potentially starting to see some momentum going down. So depending on how this closes, I may be interested or I may not be interested. Again, currently it's not looking the best. It already printed a wick right here. Now it's printing another wick. So that's a major warning sign. Looks to me like a slowdown. If it closes with a clean close, then it's good. But if it closes with a large wick like this, well, then I'm just expecting a descending structure and then a potential reversal in the opposite direction. So then I'm just being more patient, waiting for more price action and reevaluating the current price action. So yeah, started to see some bearish pressure, but unfortunately looks like it's just not gonna commit to the downside. So yeah, I think we can move on to the next currency pair, which is gonna be the Aussie and the Japanese yen. Okay, so Aussie Japanese yen, looks like there is some data error with FXCM. Let's go to OANDA. And we were just very corrective, very flat. I didn't see anything, to be honest. We were just very range bound right here. And then we went into another range. So this pair is clearly more flat, more corrective, more range bound. I'm not trading the liquidity sweep on this currency pair. So yeah, just being a lot more patient with the Aussie Japanese yen. What am I looking for? Maybe this momentum can continue down. Okay, so maybe we can get something like this going. Then look for sell setups. Or this can continue pushing with one large impulse. Look for a sell setup. Or maybe this can reverse, create a V reversal, range, push up, then look for a buy setup. So that's it for AJ. Nothing much to say. Not on the watch list. Definitely not on the watch list. Markets have been more corrective, more flat. Whoop. Pound. More corrective, more flat. So we need to be more patient. Okay, for the pound, let's see what we can spot from last Wednesday. We had a descending structure right here. And I was interested for a buy setup. Okay, this was looking nice. I liked this descending channel right here. Notice the consecutive breaks of the lows. 1, 2, 3. Push up. Small pullback, no selling pressure, price continues, nice clean close, but for me this was too late on a Friday for me to set an order. I also did not want to take an aggressive retrace like this to the entry level, to the inside bar. So I wanted to see a bit of a slower retrace like this, then I may be interested. So yeah, I was willing to be more patient for the pound, especially because 5 p.m. is my cutoff time, and this was 5 p.m. London time on a Friday is my cutoff time, and this was approaching that time area. So I did not take this trade. If it formed, let's say on a Wednesday or on a Thursday or Friday morning, sure, I would definitely be looking for a slower pullback to the entry level, because price action for me was nice. This impulse was nice. Pullback, no shift. Break was nice, clean close. So yeah, price action did look high probability, but it was late Friday. We then went up. There was a flag right here, which I would have taken, but at Zentum we are using the timed entry methodology. So the flag was nice. It fit the plan. It was looking very clean. I like this momentum. Technically, we were in an uptrend, so everything was going for this flag, but I was looking for the timed entry, which never happened. Price went flying without us, but then it reversed. So we would have taken a reduced risk loss. So if we took the classic entry right here, if we took the classic flag entry, we would have taken a reduced risk loss. And that is the exact reason why we employ the timed entry. Okay, we have found out by using the timed entry, first, we save ourselves from a lot of losses. That's the first reason. Second reason is sometimes if you enter during the night, because this was during the night, I believe. Yeah. Sometimes if you enter during the night, what happens with flags on the Euro US dollar and the Pound US dollar, they can sometimes stop you out and then go flying without you, okay? So that's the second reason, to avoid this stopping you out during Asia session. Third reason is so that we do not have to wake up during the night on top of each hour hunting for that entry. Instead, we can sleep through, making it much easier on our psychology, and again, making things much more simple. So 3 major reasons why we take the timed entry on the Euro US dollar and the Pound US dollar. And here we managed to save ourselves a couple of not 1%, but a bit less than 1%. It would have been a reduced risk loss. So if we took it with a 20 pip stop loss initially, moved the stop loss right here below this low, 2 pips below, it would be like a minus 0.5% loss. So yeah, that's it. Price went down very correctively, not a lot of momentum. How do I know? Well, just look what happens when you break these lines, these dotted lines, okay? Price is definitely not showing momentum. It's printing wicks. See? This is the only momentum that I'm seeing currently. This is the only one. Here, everything was breaking and actually leaving large wicks. So that was very, very bad. I'm here expecting, to be honest, just a range or a descending structure. Currently printing a wick, that's a major warning sign. So I would not be surprised if something like this happens. Maybe we reverse up, or price just ranges around in this general area. So Pound is definitely not on the current watch list. Yeah, Pound has been pretty slow, pretty corrective. If you zoom out, just look at this price action. We were not really trending anywhere in this price action. Pound has been really, really slow for the last couple of months. Let's bump it up to the, let's look at the daily. Let's look at the daily. And I mean, yeah, it's kind of flat, right? There was some movement right here and here, but again, overall, it's kind of flat, especially when you compare it to this downtrend, this really nice downtrend right here. So we're not surprised that if the daily looks like this, although we do not look at the daily chart, I only look at the 1 hour chart, but because I just want to make things a bit more interesting, I bump it up to the, let's say, daily or the 4 hour. So because this one is pretty flat, of course that on the 1 hour there's not going to be much entries. But that can change, right? Markets are very seasonal or cyclical or whatever the name is. So basically 1 year the pound is really slow, next year pound is really active. 1 year there's very range bound and corrective price action on the pound. The next year pound may be in a very strong uptrend or a very strong downtrend. That's why we trade 6 pairs. When one of the pairs is asleep, you have 5 other pairs that are going to produce some nice entries. It's all about, let's say, diversifying a bit, not being glued to one currency pair, but having multiple currency pairs or multiple instruments that you can trade and hunt the trends on. So, last one, New Zealand Japanese yen. Let's see, last Wednesday. Around here, we were very, very flat, very corrective. Okay. Very flat right here, very range bound. And then we did get a flag opportunity right here. So we had the impulse going up. So this was our flag. First high, first low, second high, second low. Blue candle is the entry candle, okay? And what did I like about this trade? Well, I liked the impulse up. Sure, there was a bit of a slowdown, definite slowdown right here in the impulse, starting to see some red candles, starting to see some wicks rejecting. But this candle was nice. It had a clean close, it had a large body, so it was enough for me to look for a buy setup after it. Again, in the end, I did decide that this impulse was worth taking or was worth the risk, especially with the flag being so small, so tight. One thing I know about the New Zealand Japanese yen is small and tight flags work really, really good on this currency pair. So for me, this was definitely worth the risk. I waited for spread hours to finish because I believe the entry was right before spread hours. So after spread hours finished, I entered on an even better price. I entered around here and then price did go up. okay? And it was running, let's check it out, with a 12 pip stop loss. It was running like 2% at one point, so it was running some really, really nice profits, same as the Aussie and the US dollar, which was also doing the same thing as the New Zealand Japanese yen, and then price just dropped. Okay, so the same thing happened. Basically, I took a small loss on this currency pair as well as on the Aussie US dollar. It was like a minus 0.1, minus 0.2% trade in the end because we reduced our risk. So when the price broke this high, I reduced my stop loss to 2 pips below this low. When it broke this high right here, I reduced my stop loss 2 pips below this low right here, okay? So if you remember where the entry was here, stop loss was 2 pips below this low, and then this price action took me out for a minus 0.1% loss, okay? To be honest, it fit the plan. Sure, it was Monday. That was a warning sign. The impulse was not that strong, okay? Definitely, it had a slowdown, but I liked this momentum. I liked this momentum as well. I liked this clean close on the top, and I liked the really small and the really tight flag formation. Currently, this is looking very corrective, very range bound right here. Huge wick up, huge wick down. I'm expecting more range bound price action like this. Okay, that is what I'm expecting. What am I looking for? I'm looking for just a large impulse up or a large impulse down like this. Being more patient because price is very, very corrective, very, very range bound, and this pair is definitely not on my watch list. Again, I'm just not seeing absolutely anything, especially for the trending entries that I use. This was nice because it had this impulse going for it, okay? It had this nice impulse. But right here, there are zero impulses. There are no impulses, there is no momentum, no trends, no nothing. So being more patient on this currency pair. One thing to note as well, if you're trading with Alpha Capital, the spreads can be really, really bad, okay? I have FTMO and I have Alpha Capital. On FTMO, I executed this position right after spread hours, like 1 minute after spread hours, and I got a good execution. But on Alpha Capital, the spreads were still very, very large, which I did not spot because I have everything connected to my trade copier, Traders Connect. And when I executed the position on my master IC Markets account 1 minute after spread hours, I got executed somewhere around here on the Alpha Capital account, okay? I got a really, really bad fill. I got a really, really bad price. So I took a much bigger hit on my Alpha Capital account. So if you're trading with Alpha Capital, just know that their spreads can be really, really tricky. And when spread hours finish and you want to take an entry, make sure to open up your broker, to open up the CTrader or the MetaTrader app and check the spreads if they have calmed down. So that's what I wanted to say. FTMO is good. FTMO is very, very similar to IC Markets. But with Alpha Capital, you should be really, really careful about taking entries right after spread hours. So that's it for this video. Hope you guys enjoyed it. See you guys in the next one.